So I'm going to welcome our panelists up here, and then we're going to go ahead and give a quick intro, and we're going to get right into it. We got a lot to talk about, and we got a lot of exciting things happening right now in the markets, in precious metals, in politics, and we're going to get into all of it. So I'm really excited to be able to do it. So let me give a quick intro to our panelists as they're coming up here. First of all, we have Brien Lundin from Jefferson Financial. He also leads the New Orleans Investment Conference on their 51st year. It takes place in New Orleans every year, the Golden Newsletter. Welcome, Brien.
Great to be with you, Bronson.
It's always good to see you. We say, it's been about a year since we talked, and gold has, gone up about $1,000 an ounce since we talked. So we should probably talk less, and gold will go up more. So
Yeah, you're tempting me to sign off right now.
I know,
Don't
right?
jinx it.
Nice. Exactly. We have David Morgan, who does the Morgan Report, written many books. Very excited to have David here, really an expert in the precious metal space. How you doing, David?
Doing well, thank you.
Awesome. Good to have you. And we have my good friend Russ Gray, Raising Capitalist Foundation, also known as the former host of the Real Estate Guys Radio podcast and show. Welcome, Russ. How you doing today?
Good. Happy to be here and excited to get together with the gold guys or the gold and silver guys.
Yeah, we have a really awesome panel today. I think it's going to be, we're going to talk a lot about precious metals. We're going to talk a lot about the economy, talk about tariffs. We're going to talk about what it means to be a contrarian. And first of all, before we get started, I'm going to put a couple of polls in here. So if you are driving, obviously don't participate, but if you are able to, please do respond to the poll. So I just put a poll in here. Who are you most excited to hear from? We'll give some results on that in a minute. Which of our panelists are you excited to hear from as well? So let's go around a little bit and just talk about what it means to be a contrarian. Everybody wants to be a contrarian unless, it's unpopular, which really kind of defines what it means to be a contrarian. So can somebody, I know you guys have had a lot of experience investing, talk a little bit about just what it means to you to be a contrarian and why is it challenging to actually pull it off? Let's start with David.
Well, I'm a student of the markets, and one of the greatest lesson givers, I guess, in our genre was Jim Dines, the late great Jim Dines, and he did a lot about the herd mentality, and that the herd people feel comfortable when everyone agrees with them. And to be a contrarian, you've got to be that person or that rare individual or rare group that breaks away or has a contrary viewpoint. And he used the lone wolf theory, where a leader, a true leader, is when everybody's lined up, all the lemmings are lined up to go over the cliff, but they're in the pack and feel comfortable and everyone else is doing it. And that one lemming says, "The hell with this, I'm out of here," and starts to walk away all by itself. And then someone else in the line says, "You know what? I don't think I want to die either. I'm going to follow that lone wolf." And so that was the definition of leadership that he gave. And I think there's a lot to be gained from having conviction and understanding history. I think is one of the most important things when it comes to investing and having a contrarian view, because things do cycle. And if you can see that ahead of time, or at least be open to that, I think it helps a great deal. That's it for me.
Yeah, that's great. That's great. Being a leader, that makes a lot of sense going the way people are not going. Brien, what about you?
Yeah, playing off of what David just said, that's part of it. I think the investing part of it, that the herd tends to get in and drive assets up. And when everybody's on one side of the boat, that boat's getting ready to tip over. Now, the key is in that regard is trying to time things correctly, because if you try to short a market like that, well, the famous saying is a market can remain overvalued longer than you can remain solvent. And you have a lot of risk involved that, but trying to find beyond just that aspect, I think it involves trying to find undervalued areas, undervalued options out there, areas that have been forgotten by the market. Rather than playing against the herd, find what's going to be the next thing that they haven't seen yet. And why it's tough sometimes, well, there's two reasons why it's tough for us in particular. One is that you talk to a lot of people who are saying this is the next greatest thing, and you tend to get emotionally involved in what the latest fad is, and you need to resist that. The other thing that's tough for us particularly is that we tend to hang out with a lot of contrarians. So it's hard to figure out, what's the contrarian view, because you can be within a herd of contrarians and not really be able to see the forest for the trees, or vice versa there. And sometimes it feels like you're going along with the crowd when you are in fact going against the crowd. But even I guess the bottom line is something that Jim Blanchard, my uh, late mentor and business partner, used to say all the time, is check your premises. Always look for new information, see how that changes your suppositions, your investing thesis. And even when you're in a group of contrarians, really smart people, don't just go along with that crowd. Constantly check it, and try to look at the outlooks and these views and predictions dispassionately. Try to divorce your logic from your emotions.
Yeah, that's really good. It's hard to tell if you're a contrarian among contrarians. So that's true. It
Yeah.
depends who you're around is a really big deal. That's huge. Russ, what about you? What do you have to add to this?
So thanks for letting me go last, and they took all the good answers. I think that really I'd call it common sense. Common sense. Being a contrarian investor is just thinking for yourself. David talked about leadership. You think for yourself, and I think what Brien talked about, check your premises. I think making sure that you have a full perspective. I think it's easy to live in an echo chamber. I had that happen to me. I tell the story all the time. I don't mean to beat it to death, but prior to 2008. I was in a real estate investing echo chamber. I didn't understand precious metals. I didn't understand the bond markets. I didn't understand any of those things. Had smarter people than me, like Peter Schiff and Robert Kiyosaki and Kenney McElroy, warning me that the real estate market was in trouble. I didn't take the time to dig in. They didn't bother to explain why. So the conclusion, without showing me the math, wasn't good enough. And so I thought I was being contrarian because I was going against them, but I was really kind of going along with the momentum of the real estate. So I think at the end of the day, you need to be willing to do your homework. You need to be willing to listen to people who you disagree with and then try to understand why they think the way they think. And then you have to, at some point, make a decision and accept the fact that you're going to be wrong, um, probably a lot more often than you'd like. And that's why when you make whatever your position is, I think it's just wise to make sure that you don't get overexposed to any one thesis, especially when you're getting started out. When in the beginning, when you're starting, whether it's in an area that you have never done before, whether you're just getting started in investing, or when there's a major change, right? This is a whole new ball game. We had a major shift in 71. We went off the gold standard. 82, we reset the bond market. 40 years, nothing but falling bond prices and a bond bubble. Then we had interest rates jack up. Now we've got this whole tariff regime. And so when there are major changes, I think that, somebody who's a contrarian can go all of a sudden find themselves mainstream, because everybody wakes up and sees what they saw coming.
Yeah, absolutely. Well, I think it's too kind of what we're all getting at as well is having diversity of thought is really important, and getting around people that have different opinions and different views and hearing different thoughts so you can really make your own opinion. And I love Robert Kiyosaki's thing of there's not just two sides to the coin, there's actually three, where one is you're standing on the edge of the coin looking at both sides before you make a decision. So I think that's really powerful. Well, let's talk. We've got a
Can
lot.
I just
Please
edge
jump
in
in.
one more?
Please.
This is
Yeah.
one of my favorite quotes. When everybody's thinking the same, nobody's thinking very much.
Mm-hmm. Yeah.
That's a contrarian.
That goes in with the view of Henry Ford's quote. I'm going to butcher it a little bit, but thinking is hard work, which is why so few people do it, right? Actually thinking about how things, not just like having a thought, but spending extended time to think and really process is powerful. Well, guys, want to shift a little bit into what's happening in the world right now. We're in an exciting time right now. Tariffs, world trade, there's all kinds of stuff happening. Let's talk about tariffs and Trump. Do you think, how are tariffs and Trump going to impact markets? And we've seen positives in precious metals because of some of the fear there and of course the demand for metals. But let's talk a little bit about kind of what we're seeing as far as how things are going to shape up over this next 6 to 12 months, kind of going forward with international trade. Let's start with David on this one.
Oh, thank you. It's a tough one. I think primarily the tariffs were a trigger. We were inevitably on this course no matter what. And nothing had really hit the end of the road, so to speak, until these tariffs started to emerge. And there was a lot going on before any of them were enacted. They were proposed For example, there was a great deal of metal that came from the LBMA, the London Bullion Market Association, across the ocean into the COMEX in New York. And that was started because of fear of adding 25% tariff to everything. And as this thing worked itself through, it's really not, it's in not even soft concrete. I mean, first it's on, then it's off, then it's this. No, we're going to exempt electronics. No, it's only, so it's going back and forth. But the point I'm making is that the trigger really riled the markets. And the part I think that the bigger players may not have foreseen is the keys of the kingdom, the bond market. Everything revolves around credit and debt. And when this started to upset the bond market, I put a couple of tweets up over the last few days about how the real estate market could affect the overall economy based on, mortgage rate and the bonds. So anyway, the point being is that bond prices could go down with higher interest rates during this mini crisis so far, because the fear is if you don't trust $1 3 months from now or 6 months from now for your grocery bill, why would you trust it 10 years or 30 years out? On top of that, when we have taken the Russian 300 billion and froze it and purportedly used it to help the Ukraine people, other nation states may note of that. Can I trust these treasuries? Can I trust the US? How safe is my bank account? And then working back to the gold thing I mentioned a moment ago, that tariff scare started to move in a different direction. People started asking to repatriate their gold because it looked like there was a delay in normal delivery amounts. It's like being a few weeks, it turned into 4 to 8 weeks. So Germany and some other countries said, well, wait a minute, maybe I don't want the Fed holding my gold anymore. Send it home. And I've tweeted that out a few times. And so I think we're in that tipping point that I've talked about for so many years. I think we've tipped.
Yeah, amazing. Russ, why don't you jump in?
So there's a little bit to unpack there, but I took a couple notes, and I actually gave a talk on this at the Best Ever conference. So if anybody's interested in getting that, you can send me an email to follow@russellgray.com, and just make sure you tell me you want it, and I'll send you the link to it. But yeah, the bond market is everything. But I think the thing about Trump is Trump likes to keep people off balance. And so that's one thing to just understand about his style. He's going to keep you off balance. He's trying to keep the world off balance. It's just a way of letting you know he's in control. He does that everything. I mean, if you watch him shake hands, he will grab you and pull you into him. He'll pull you off balance. It's just his mojo. It's the way he rolls. So you just have to understand that it's not necessarily a policy, it's a tactic. And so he's working towards something else. And so you have to ask yourself, what's he working towards? And I think they've been pretty clear. Secretary Bessent and Trump have been very clear, overtly saying that we are not concerned about Wall Street. We're concerned about Main Street. And they are using extreme pressure to convert this economy from a financialized economy to a productive economy. And they may or may not succeed, and they don't have much time, because if they fall into the inflation pit, they're going to lose the midterms and they won't be able to get anything done. Right now, the judiciary is kind of standing behind them in their way in some regards, not so much in their economic policy, but they were talking about even, like replacing Jerome Powell. So I think, just to kind of bring it back down to Main Street, what matters is the tariffs unsettle the bond market, to David's point. And when the bond market gets unsettled, that's going to mean higher interest rates, because people are going to sell bonds. And then what higher interest rates mean, or the inverse of that, is going to be gold typically responds well. That's what happened in 2008. That's what made me a gold guy. When the mortgage-backed securities, when the subprime rates, or the subprime started to default, and it caused those securities to crash with the leverage. I mean, these hedge funds, that's something else we should talk about, guys. These hedge funds are out there levered like 20 to 1 with bonds. They were all betting on lower interest rates. They got higher interest rates, and that imploded. So, if you go back and study long-term capital management in the late 90s, you realize that these hedge funds can literally implode the entire financial system. So I don't care for Wall Street, because they gamble, and then Main Street's got to bail them out. But for Main Street, what that means, and we've already seen it, is higher mortgage rates, and that means lower equity in real estate potentially. But the safe haven is gold. When people don't want to be in the dollar, they don't want to be in the bonds, they don't want to be in stocks. Where are they going to go for safety? They're going to gold. And so we're seeing that. And I think that that's happening not only at the central bank level, clearly, but I think it's also beginning to happen a little bit more at the investment level and even down at the Main Street level. And a lot more of it needs to happen at the Main Street level, in my opinion.
Yeah, central banks buying gold. I just launched a survey on what you think is driving the trend for central banks owning gold, hedging against a declining dollar, adopting a new monetary system, geopolitical instability, or loss of trust in the U.S. fiscal policy. So you guys can go ahead and an audience, go ahead and jump in there. Brien, what do you think? Talk to us a little bit about Trump tariffs, precious metals, the market. What are you seeing?
Yeah, I wouldn't disagree with anything that David and Russ just said. I'll add a little bit to that the result of the tariffs is that the rest of the world is trying right now to sell America, essentially. They're selling bonds, they're selling the dollar, which were the two of the three typical safe havens out there, and leaving only gold. I let off a piece I wrote this earlier this week that, it's an open question whether the rest of the world can get along without the US, but they sure are trying right now. And that's the end result is, despite the plans and the hopes of the Trump administration, which were to drive interest rates lower because of the somewhere between $7 and $9 trillion of treasuries that have to be refinanced, rolled over this year. They're desperate to get interest rates lower and take some of the froth off of the stock market and equities. Well, they got the froth off of the stock market, but they didn't account for the fact that the rest of the world was going to start selling the US and driving bonds, driving treasuries higher. I mean, driving the rates higher, yields higher. And that's the problem, as Russ mentioned, that the bond market is everything. And if rates go higher, and Russ, I'll correct you, those hedge funds aren't levered 20 to 1, they're 50 to 100 times levered on interest rates. And it got very close over the last week to seeing some real carnage there, to where the Fed was going to have to jump in. And I think the kind of reversal, the fact that yields fell the last day or two a little bit, means that there's some serious work being done out there in the markets on behalf of the US to get yields back down and to counter the selling of treasuries that we've seen.
Yeah, well, and Brian Besant just came out and said that if the Fed won't act, the Treasury's prepared to step in, right? They need people buying those bonds to bring those yields down. And so there's going to be pressure from the White House on the Fed to step in. There already has been. I think that's why they were teasing the idea of replacing Powell. And, Besant came out overtly and said, hey, we want to buy bonds. I do want to step in on that comment because it was the third point. I didn't want to do it because I felt like I talked too long. But you talked about selling America. There's a flip side to selling America. They're selling America's paper assets. But on the flip side of that, a UAA just announced they're going to bring $1.4 trillion into U.S. investment. So there's a lot of investment dollars coming in there, buying into the U.S. in terms of in building businesses. And this is the fundamental thing that I think it goes back to this notion. If you have the paradigm and understand what these guys are up to, and they've told us overtly, we are going to privatize this economy. We are going to de-financialize this economy. All the financial news, most of the financial players all revolve around the financial side of the game. They pay attention to the financial markets, and they place their bets on the movements in the financial markets. Trump and the Trump administration have elevated themselves in terms of being really far more dominant in the financial markets than the Fed. Remember when you used to hang on every word that came out of the mouth of the Fed? Now you're hanging on every word that comes out of the mouth of Trump or off the thumbs of Trump. Right, that's a big shift. It didn't used to be that way. And then they're coming out overtly saying, this is about privatizing. This is about privatizing. So while the financial assets are selling, there's over $2.5 trillion of investments already announced and more coming in. Honda just announced that money coming into the U.S. So I think as a Main Street investor, that's going to open up opportunities in places that I think guys on the financial side of things don't really think about or look at. And Bronson, guys like you are going to see that, I think.
Yeah, it actually is interesting. Brian shared this. I want to share this on my screen for a second here, but he has this great in his newsletter. If you're not getting his newsletter, the gold newsletter, and just some of the stuff he puts out there, it's really phenomenal. But it shows here the basically gold is continuing to become a safe haven where treasuries, basically, I think this green line, right? Brian, maybe you can help me here. The green line is
Yeah,
this,
the
this is
green line
treasury
is the dollar index and the
dollar.
red
Yeah.
line is treasury yields. And you see that very sharp divergence. And the correlation is the lower panel, which has just plummeted to where they're negatively correlated. Now that correlation is still somewhat negative because the dollars gained back a little bit over the last two sessions since that chart went out. And yields have come back a little bit, but they're still negatively correlated, which is weird, strange, and unusual. The key point, and I think getting back to what Russ is saying, is that these are Trump's tactics. And right now, those tactics are working to attract investment into the US, as Russ said. They're working not as planned, I guess, the sell America kind of a thing. But if you look down the road, this too will pass. At some point, the rest of the world will cave. Trump will find some sort of a deal. It may not be the deal that he was looking for, but he's certainly going to trump it up as being the deal he was looking for. So it's all going to pass at some point. So
Yeah.
what do you do when that happens, when peace breaks out? What's going to happen in the markets? I think we get back to the one investment that's worked through everything over the past 14 months now has been gold. When treasury yields have been rising, gold has risen. When treasury yields have been falling, gold has risen. When the dollar index has been rising, gold has risen. When the dollar's been weak, gold has risen. Through everything, gold has been the all-weather investment. And this is a key point that I've used throughout my way too many years in the market, is that it is a bull market when the market interprets anything as being bullish, even what would be previously or typically bearish news, if they start to interpret it bullishly. And right now, gold has all of these tailwinds that market is interpreting whatever happens as a reason to own gold. And at bottom, gold is in a bull market and it's going higher. And if you have to put your faith or money in any one investment, I think you definitely want to have a position in gold, and I think silver as well.
Right. Now, central banks, this is the chart or the poll that we shared here, and most people think that central banks are buying record levels of gold in 2024. It's continuing to drive in 2025, but it's really a hedge against a declining US dollar. Let's talk a little bit. I know a lot of investors we work with. I know you have Brian, your community, David as well, Russ, you guys, a lot of people are familiar with metal. A lot of our folks are more real estate and other assets. I remember when I first discovered, actually it was an event that Russ put on years ago, was discovered what metals really were, investing in gold and silver and why it was so valuable. I guess, can we just have a brief conversation around allocations, kind of generally what people do and how do people get started investing in metals? What's the case for it? Maybe we can start with David on this one as well. I know you're a big fan of this topic.
Bronson, I think what I've advocated from the beginning is that you need to have the physical precious metals first. You really shouldn't have a metals portfolio based on gold equities, mining shares, resource stocks, that type of thing, until you have some amount of gold and silver that you have in safekeeping. And that amount varies. Most financial planners, if you go to them, they're going to tell you should have 6 months worth of savings. So whatever your budget is, I think that's a good round number. And once that's accomplished, I think you can sleep well at night. And if you want to move up the risk reward profile from there, you can go into cash rich, unhedged mining companies. And for the most part, that's the royalty companies, which we featured from basically day one of the Morgan report, because they don't have the exposure that a mining company has. They're basically financing mining projects. And because of that, they don't have as much risk. And a lot of these are up still 10, 12, 100%, 10x, 12x, that type of thing. Whereas many of the lower tiered mining companies have either gone off the board, especially the junior exploration companies, because it's a very difficult market. But we do allocate to all those three sectors. It's just the proportion that we use is big money in big companies, medium money and medium companies. And if you're going to speculate, realize what you're doing, bet a little to win a lot. So that's how we allocate. As far as percentage of an overall portfolio, I've always said 10%. At this juncture, I would recommend up to 20%. Two of the best studies in the world, Ibbotson and Associates, recommended 15.7% during all weather conditions. And CPM Group from New York, Joffrey Christian did a study about 4 years ago from 1968 on. So it's that caveat that 25% was the correct allocation to gold.
Right. I put in a poll in here as what is just asking you. Most people have answered at this point. If you haven't answered, feel free to jump in there. What percentage of your personal portfolio is allocated to precious metals, gold and silver? We'll get the results out in just a minute here. Russ, I know you talk a lot about having gold, using gold as liquidity. Why don't you talk a little bit about strategies of investing in gold, and not just investing, but just holding it as money, and how do we use it for liquidity, and just some of the thoughts around metals?
So first, I want to agree with David. I'm not a big fan of conventional financial planning models where you do an asset portfolio based on percentages. I have a portfolio theory that I call strategic real asset investing, and it consists of rings of risk. And at the very center of the rings of risk, you have no counterparty, and you really have no currency risk, and that would be gold. And so I don't consider it an investment because it doesn't produce income. My definition of an income is it's a productive asset, but it's money. Gold is cash. And so when people get afraid and they want to be in cash, they should be sitting in gold. And to David's point, it's not a percentage. It's making sure that you have a foundation of liquidity built that is insulated from counterparty risk, currency failure, banking system failure, credit failure, and something that from an equity perspective, sitting as equity on your balance sheet is going to go inversely to the other big equity on your balance sheet, which is typically real estate, because real estate is very dependent upon healthy credit markets. When credit markets break, then real estate values drop and gold denominated dollars goes up. Of course, that doesn't do you any good. So I tend to think of gold like equity in real estate. And so you asked about liquidity. I'm in the camp, just like real estate, never sell. So the idea with gold would be that you would use it as collateral to borrow against, and then use arbitrage in order to buy another income producing productive asset at a positive spread. And now that our good friend Rick Rule, our mutual good friend Rick Rule, has come out of the gate with Battle Bank and says that they are very close at the retail level. I think they're doing it right now through bullion dealers. That you can borrow against your precious metals, which is fantastic. It's like taking a home equity line out, or borrowing against an insurance policy. You get to keep all the upside of the asset. You get to use the liquidity in whatever currency you choose to borrow in, and go purchase an asset. And as long as you produce something that's going to yield higher than the cost to borrow, you're going to end up with a positive spread. So I think that's if people would think of gold as cash, and they would think of gold as equity, and then they would use it as a permanent hold and use it the way they would equity in a property or equity in an insurance policy they never plan to liquidate, then they're going to use it as collateral to access working capital without ever having to let go of the gold. And that way you don't have to realize any capital gains. So long as we have taxes in that regard, you don't give up the upside. And as long as you trust the asset in the long term, and I don't know, anybody would look at gold's track record in terms of preserving real purchasing power in any currency, not just the US dollar, in any currency. I don't think it gets any better than gold for having equity on your balance sheet and cash on your balance sheet. It serves both purposes.
One of the best moves I made was about 5, 6 years ago. I bought a whole bunch of gold, a bunch of silver, and now I have the physical stuff. I can have it in a vault and I can borrow against it. And I've done it. And it's like a HELOC, just the days that I have it out, it's about a 10% interest, and it's amazing, right? So I could basically, instead of holding cash, I can have money in metals and be able to access it for liquidity, which is amazing. But it's a different way to think about it, less as an investment and more as just actually storing wealth. And so again, I challenge anybody to kind of take a look at that if you haven't thought of that. We went to the precious metals metals allocations here. Looks like we have 65% have 0 to 5% of their investable assets there. And then there's about 35% or above 11%. Some are actually, some people have quite a bit in there as well. So Brien, how do you talk to people about allocations of metals and get started and kind of the conversation that we're having here?
Well, I agree with my other two panelists here that physical metals is the most important thing. And it's really a complicated area. People get intimidated by how do I get involved in gold, silver, precious metals, and mining stocks, and it's a wide spectrum. And I always tell them, first thing you do is buy physical. And how much physical is, again, the big question, but I tell them to look at it as insurance. There's two reasons to buy gold. As insurance or as an investment. And if you're buying it as insurance, what you're insuring against is not something that may happen, it's something is going to happen. That the dollar or whatever your home currency is going to lose purchasing power over time. And right now, the dollar is losing purchasing power vis-a-vis gold at the rate of about 30% a year. So that's the kind of calculation you need to have. Whatever money you can put in precious metals right now is going to be shielded from that future depreciation in the purchasing power of the dollar. And there are very powerful, compelling arguments that that trend of depreciating purchasing power of the dollar is going to accelerate in the future. And gold's seeing that right now. The CPI or even shadow stats estimations of inflation aren't at a 30% clip right now. But gold is rising in anticipation of something. It's a predictive mechanism, a predictive market, and it's looking ahead and seeing something. And we're going to find out what it is. But the key is that whatever money, whatever dollars you can put in, or whatever your currency is, whatever cash currency you can put into the metals right now, will be protected almost assuredly from that further depreciation of the purchasing power of that currency. So that's insurance, and that's the way you need to allocate whatever your available cash, funds, equity is. You gain equity in putting it into the metals. Now, if you believe in that macro picture that argues for a further, more rapid depreciation in the currencies and vis-a-vis an increase in the dollar value of gold, then you can invest in the sector by getting in leveraged investments. And there's a lot of ways to do that. The way that the sandbox that I play in are the mining stocks in Gold Newsletter. And those have finally started to respond. And it's been kind of a weird bull market in gold because the mining stocks have not really participated until very recently. So that's kind of a second bite at the apple, as it were, if you want to get involved from an investment angle.
Thanks for the answer. I just put an asset shift poll out here about what are you increasing your allocation to this year in 2025. The highest answers were gold, silver, real estate, and cash. And the lowest was crypto and doing nothing. So at least sounds like a lot of people here are taking action, which is great. Love it. I did want to touch on, we're going to get into some questions in here in a few minutes, but I wanted to touch on, David, I know before we talked about rare earth elements, rare earth metals. I know there's a lot of work you're doing in that space. Can you share kind of what you're seeing there in regards, especially with some of the tariffs and some of the stuff that comes from China and other places? How do you see this playing out, and how can you play that as an investor to your advantage?
So someone from the last time that we got together called me and kind of reached out, and he wanted to start a fund in precious metals and rare earth elements. And I'm fairly well connected with one of the best in the space in the rare earth element sector. So I called him and asked him, and he said, "You've got about a 2-week window." He said, "China really is going to close the rare earth elements if this tariff thing goes through." I'll have to give the caveat, that, and I agree with what Russ said. Well done, the tactic of Trump. He slaps you in the face and then backs off. Everybody's got a plan until you get slugged in the mouth, what Tyson says, and that's his tactic. So we don't know exactly where that's going to go. But based on what I said, the tariffs are really put in place. It's rumored that the rare earth elements will be cut off. And that is things that we don't think about, but solar panels, Gorilla Glass for your cell phones. There's so many things that are dependent. The great big windmills that we use for wind power, those use a fair amount of rare earth elements. And we have a little bit of rare earth element mining here in the United States, but last time I was actually on one of the major financial news channels a few years back. And Liz Clayton, asked me about rare earth elements because something real big had come up in the news. So she got a hold of me. Well, I got a hold of my friend, so I didn't make any errors. And this mine ships all of its product to China to be refined and brought back in the United States. And you could feel her drop the microphone. She goes, "Really?" I said, "That's the truth." So we don't even refine any rare earth elements here. Now, that may have changed in a few years. I don't follow it that closely, but I follow it closely enough to give you the information. So that should scare everybody. And the other thing, if I could add on to that, is how much of our medicines come from China. And the last one is how much military hardware is made in China that our military depends on. And the last one is the great big power system that we're all on this grid, and those transformers are made in China. So if it really gets pushed to shove, we might have to rethink this thing. As Brien said, he may just say, "Oh, it's just how I planned it." But he better have somebody planning some of these bigger potential risks that are really a concern for everyone at this point in time. Not to scare. I don't want to scare. I want to prepare. But look, you asked me I'm a straight shooter. You asked how it is. That's how it is.
Well, Jamie Dimon in his interview on Fox News recently talked about it being a security risk that, China does all these things, a lot of those things you mentioned. And so, Russ, I wanted to ask you as well, like, what do you see? I mean, this is obviously a national security risk because of a lot of our military stuff or pharmaceuticals and things come from China or rare earths. I mean, what is the way out for that? Is it to find a deal with China across the board? Is it to like what do you think? How do we navigate this, or how does Trump navigate this?
So Trump's a great salesman. And when you understand sales technique, you understand that you have to upset the status quo in order to get people to accept change. The pain of doing nothing has to exceed the pain of change. And so he brings things into the public awareness and then shines the light on them with intensity to get people to understand there's a problem. And then he can introduce a solution. So he came out of the left field with let's acquire Greenland. And then he goes to negotiate peace with Zelensky and he goes, "You're going to pay us back by giving us a rare earth deal, a strategic metals deal," right? Then he's got China now cutting everybody off and everybody running around worried about it. So now you have great awareness. I guarantee you there's a lot of people out there had zero idea even what strategic metals were until just this week. Now they know. And now they're looking at Trump wanting to get Greenland and wanting to cut this deal with Ukraine. If they start digging in, they're going to find that. Now, I'm not, in his head, I have no idea what he's doing, but it just seems to me that he's making the case for we need to loosen the environmental regulations here that have prohibited us from developing these things. We need to bring back all of this refining capability and mining capability and be more domestically self-sufficient. And I think people are beginning to see that that's true. And there's probably going to be more support. We're going to win a few percentage points over for people to say, maybe that idea of acquiring Greenland and getting access to those metals is not such a bad idea. And maybe it's not a bad idea that we ask Ukraine to cut a deal with us to pay us back a little bit. So, when you kind of look at everything that's going on, it's just, I'm not saying that's what happened. I haven't heard anybody say that, but just for me, it wouldn't surprise me if that's what he's doing.
Yeah, it's interesting. There's so many pieces on the board here. It's like, the trade deficit that we have, basically China has the same, surplus, and a lot of times they manipulate the currency, their own currency, they steal IP, they do all kinds of trade practices that are not good. So it's good to, be able to stand up to a bully and try to find a different way to do it. Brien, what would you like to add? Anything else in regards to this? I know you have some opinions on this too.
Yeah, I think that, again, I think it's all going to get resolved sooner or later, but I think it highlights for the US and for the world the risk of globalization when you rely on other countries and things go south. It leaves you vulnerable. The issue with rare earths in the US, the issue with critical metals, which I think copper is one of the ones that's most critical that people tend to overlook. The issue of all of that is all of it's solved by either price or money or the brute force of money. I think the copper issue is going to be solved because I think the price of copper is going to rise, double or so over the next 3 to 5 years, thereabouts. It has to happen because the world's going to need a whole lot more copper. For rare earths and the like, rare earths can be extracted in the U.S. There are deposits. The market has not worked to facilitate that because China has always been providing at a lower price and availability all the rare earths the world needs by the brute force of that, a directed economy. And the US, if it comes down, push to shove, can do the same thing. The cost to develop a rare earth mine, Mountain Pass right now is the only one in the US. Rare Element Resources has one in Colorado that could be developed for a rounding error in the federal budget. So that can be solved. But the free market, the mining market hasn't been able to do it because prices have not been sustained and the money hasn't been there from an investment standpoint. But, I think it's what this episode has done is highlight these risks. And if people are listening and watching and thinking, if our politicians are, and if they're able to look a little further down the road than the next election cycle, then these issues can be solved and addressed once this kerfuffle is behind us.
The word of the day is kerfuffle. That's a good word. I think I've ever heard that. So that was
I
a
love
good,
that word. It's a
kerfuffle.
great one.
It's like tomfoolery. Awesome. I did this poll here for Black Swan events. Obviously, no one saw COVID coming, and that was obviously a black swan. So a lot of people, it could be a debt crisis, could be geopolitical war, currency collapse, or of course something else. So I guess the question really is not that I want to leave us with before we go into general questions. And so if you have questions, start getting those ready if you're listening in our audience. But I guess the question for our panelists is, what besides owning metals, like obviously owning gold, owning silver, that's a great strategy, right? So besides those, what is a good contrarian approach right now, regardless of what black swan or regardless of what's going to come the next 6, 12, 24 months or 5 years? Russ, let's have you go first on this one.
So it's a great question. And I think that if you own things that are real and essential, and people will get up every day and make it their first priority to participate with, pay for, utilize. So, agriculture, energy, housing, I think are going to be on those lists. And then instead of trying to buy low, sell high, speculating on asset price denominated in a specific currency, I'm obviously a huge fan of real estate. And if people say, well, what if the price goes down? It doesn't matter. If as long as you have the cash flow to service the debt, or, if you want to be really, really contrarian, purchase it for cash and then just accept that cash flow, whether they pay you in dollars, crypto, gold, silver, banana peels, or puka shells. It doesn't matter. Whatever the currency du jour is, people are going to get up every day and they're going to need a roof over their head. Even in regime change, even in currency collapse, the one thing that you have to make sure you don't lose is property rights. Right? COVID was really an incursion on property rights. People didn't have the right to own their business or operate their business. They didn't have the right to even leave their property or enter their place of business. I mean, it was really an incursion on freedoms. I think, from a black swan event, we have to be very concerned that some crisis is going to come along and we're going to get a totalitarian lockdown again. I don't think the American people would put up with it again, but who knows, depending on what the nature of the beast is. But I would say that from an investing perspective, if you own things that are real and essential that people get up every day and will labor for, then the odds are you're going to receive a percentage of their labor in receipt for the use of or the acquisition of those goods and services. And
Yeah.
so if you're there, I think you're gonna be in about the safest place you can be when knowing there's no place that's truly safe.
Yeah, I love it. Yeah, you taught me that a long time ago. Was just get things that hold their value, and I think you bought a whole bunch of. It's like a share to share, but just ammo for people are going to need that, right? Ammunition, or things that are tangible, owning real estate, owning metals, owning all these things. So I think that's great. Um, Brien, let's go to you next. What do you think? What's your contrarian move that? And I know you're going to say owning gold because you're the gold guy, but what else? What else are you seeing as well that people can do?
Yeah, I agree. For us, people always need a roof over their heads, no matter what happens. But if we're looking again at it from a contrarian point of view, we want to be in what people are not in yet, but they are going to be in. And what is just turning right now is the sector that I'm intimately involved in, and that's the mining stocks. And I tend to focus on the more speculative end of that. I do cover royalty companies, as David mentioned, which are great investments. But I do tend to cover some of the more speculative companies out there, further down the food chain. And in that respect, there are companies that are not, hair and fire speculations, exploration companies. There are companies out there that have very large resources identified. Sometimes they have economics put on them. We know what they have. We know what their value would be in a normal market, but they're trading far below what their intrinsic value would be in a normal market, much less a really buoyant market like we will have now in the metals. And these companies offer the kinds of potential from these low levels because this sector has been completely overlooked so far. These companies offer the kind of potential that you would look for in a exploration play, a drill hole play, but they're backstopped by the value that they've already uncovered. And the reason behind this is that this market, this gold and silver, well, gold bull market, at least for now, uh, was started by central banks that were really buying hand over fist and consistently, and still are. And central banks don't buy silver. That's why silver has underperformed, and they don't buy mining stocks. But gold prices are so high right now that we are starting to get Western investors moving into the sector because it was the biggest gainer of the first quarter, and hedge funds, institutions cannot not be in the sector. So now they're moving into it. They're seeing that the gold price has nearly doubled. So how do you play it? You look at what's been left behind, what's been overlooked, and that's the mining stocks. So they're just starting to move. And I think from an investment angle, a speculative angle, I think that's a great place to be over the next year.
Yeah, I think it's great. We'll take some questions at this point. We'd love to take some questions. Also, I think, just kind of my 2 cents on this as well. I think, really one thing we've seen lately is that it's particularly in real estate, which is really our expertise. We have 2,500 multifamily units we've done, and just a lot of stuff like real estate. It's really the cash flow has dried up because of rates rising, because of increase of costs of insurance and other things like this. And so we've pushed more to cash flow businesses or things like oil and gas that really, that cash flow, because cash flow, what allows you to be able to live, allows you to leave a job, allows you to have really true financial freedom. So that's something we've really pushed to. I did want to touch base. If we don't have any questions coming in, please drop those in either the Q&A or the chat box there. We got a few more minutes. So I know this happened, I believe it was about a year ago or a year and a half ago, where there was, we're getting some time where for physical metals, a lot of the metals market is manipulated. There's a lot of, metals ETFs and things like this. And, I can't remember which, I think it was JP Morgan's silver ETF. They said, oh, we have a 20-to-1 ratio, but we're temporarily releasing that. And they didn't say what it was to or how long it was for, that we're not going to have a 21, meaning we buy one piece of silver and we sell 20 shares. And so the risk, of course, with ETFs or with, is if there's a run on silver or gold, like who gets the metals, right? It's probably not you, right? So I guess, where do you see, I'd love to come back to Brien and we can kind of go around on this, but where do you see there being more physical shortages of metals, where metals are actually having to be, I think there's some stories of this where metals had to be basically brought from London over to New York or vice versa, having to kind of cover some shortages. Are you seeing like shortages of particular metals at this point?
Yeah, I am. That issue has kind of resolved itself from a tariff standpoint as far as the gold and silver flowing from London into the US. I think that a lot of that, or at least a part of that, was not just tariff related. I think it was gold going where it was supposed to have been all along because all these curtains are being drawn, uh, cast aside, and by the Trump administration. So there's a lot to talk about there, but I have, and I'd be interested to hear what David has to say about this. I have really discounted the industrial story side of silver for many years. I think it's the vast majority of its value is monetary, and I've really disregarded the industrial usage side of silver. But that is starting to come into play. In about 5 years from now, it's forecast that all of the annual supply of silver will be needed to go toward industrial usage, which really puts um, uh, really puts a cramp on monetary usage and monetary supplies. And I have heard through my sources in the physical metals industry, the trading industry, that there are some severe um, supply constraints right now on the industrial side of users really paying for silver, trying to lock up silver supplies, and therefore taking a lot of it on the market. So I think that's an issue. And copper, I think over the long term is another one of those great plays because there's just not enough being produced, and there's not enough that can be produced at current prices.
Yeah, that's great. David, can you talk a little bit about silver and kind of what you're seeing there? Because I know silver seems to have lagged gold as far as some of this appreciation we've seen in gold recently.
Yeah, I'm just sharing my screen right now, Bronson. Do you see it?
Yeah, we can see it. Looks great.
Okay, so this is from Matt Watson, who's an analyst that I'm friends with. And this shows that we've been in a deficit the last few years, depending on which study you look at, the Silver Institute or CPM Group or Metals Focus. But we've been in a deficit of round numbers, about 200 million ounces a year. So what you see here in this red line is all mining and recycling is roughly 1 billion ounces a year. It goes off slightly to the right. And the reason for that is recycling is pretty static. It could increase, it probably will, but the silver grades continue to deteriorate. So in other words, when I toured the Lucky Friday mine over here, meaning pointing an hour's drive from where I'm sitting, the average grade in there was about 17 ounces a ton. You don't see that kind of grade much anymore. There's a few. So I think that's a good look at the potential mining and recycling efforts. So what you see is what Brien just alluded to is really starting this year, everything is industrial wise is above that line. So the green is solar, the yellow is automotive, photography really doesn't count anymore. The little orange is silverware, but investment demand is in the silver or the gray bars. This is where I disagree with Matt because he's showing a steady state demand, investment demand on silver all the way through the next 25 years. I totally disagree with that because I think as we get into the final innings here, people are running the gold and it'll spill over into the silver market, which is what we saw in the late 70s, early 1980. So people, the word silver and gold they're not synonymous, but usually you don't say one without the other. So people that wake up late will listen to Russ and they'll say that real estate guy likes gold. Geez, I would just love real estate. Now I know I have to have gold. I can hedge my real estate position. I can't afford it. It's 4,000 the ounce. I've got about 6,000 I can put in the cash. Maybe I'll buy silver. So I think that alone. The other thing is this chart's a little off here. In 2020, the gray bar should be up here. It was 320 million ounces were bought by institutions in 2020, the COVID year, or 2021. And retail steady, what he shows here, about 200 million ounces a year. So we had over 530 million ounces of silver purchased for investment purposes alone in 2020. I think that was probably Scott Maynard from the Guggenheim group, and he was the chief investment officer. And when he was asked at the WEF, formerly known as Davos, was asked by Bloomberg, what's your go-to investment for this year? And he said silver. And the guy just about swallowed the microphone. He couldn't believe it. And he said, well, gold is pretty near its high, but silver's about 40% undervalued to where it's been at its high. I'm going to buy silver. I think he did. I can't prove it. I can prove that that much was bought. So when the institutions start to come into silver, which I think they will, and if the institutions don't, pension funds may. You may see insurance companies look at it. I had a hedge fund manager from the Far East that kind of got on my case in a good way. And he was convinced that silver was really a superior investment as far as what's going on in a high-tech system, a high technology society, which we're all in, with AI and everything else is coming down. Think of how much silver is going to be needed for these Rolex that Tesla is going to be using.
Yeah.
So that's the best case. That's the low case there. I got the word low. The high case is even more dramatic. It slopes up to the right even at a greater angle than this. But remember, this is conjecture and there's some assumptions here we don't know. Are we going to be in a steady state for mining and recycling? Jerome Smith made that mistake in 1980. He predicted 200 an ounce silver in 1990 in 1980. And the 60 years of data was 320 million ounces a year. For 60 years, 320 was the number. So he plotted out 320 and all the uses just similar to this and said, 10 years from now, we got to be at $200 silver. Except a funny thing happened as the ink was drying on that book. We had a shift in technology for mining. We went into a great deal of heap leach, which doesn't work well for silver, but it does for gold, but it brought a lot more silver.
Hey, David, we're getting short on time.
I'm done.
It's really good, and I love it.
done.
Encourage everybody to check out your silver content. It's incredible, the books and stuff. So I just want to really thank our panelists for being here today. Wanted to just go around quickly. If you want to drop in the chat, just maybe take 20 seconds each. Just, hey, here's how you can find me. You can follow me. So why don't we start with Brien, how people can hear about your conference and follow you and get your gold newsletter.
Yeah, NewOrleansConference.com. It is, I think, the best across the board investment event out there. It's certainly the longest running in the world. And we give you money back if you're not completely satisfied. So how's that for a guarantee? It's November 2nd to the 5th this year. You can find out the information at NewOrleansConference.com. And you can also find out about me and everything we do at goldnewsletter.com, which is the longest running investment newsletter in the world.
I love it. It's a great event. I've been to it. It's wonderful. Russ, how can people follow you and hear about what you're doing?
Well, I think I've already put it out there a couple of times. So one more time, very simple. Just send an email to follow@RussellGray, RussellGray.com. And if there's something that I offered you're interested in, just tell me. It's not a robot. You're going to get a real human response. Just tell me what you're interested in. But got a new show coming out, Main Street Capitalist, and going to be talking about what I think are going to be the big opportunities with all this capital coming into Main Street. I think Main Street investors are going to have a fun run the next 5-10 years.
I love it. Awesome. David, how can people follow what you're doing? You got a couple links in there I saw as well. Maybe just mention what you're doing.
Yeah, the morganreport.com. Just go to that landing page. It's self-explanatory from there.
Awesome. I put an event in here too. Our good friend Ken McElroy is doing his Limitless Expo, about 2,000 people in Dallas, July and August this year. I have a code in here, so Russ and I are going to be speaking there. If you sign up using this link, the prices go up next week, but if you use this link, you get 10% off and there's a free celebrity dinner. So if you use that link and let me know, I will buy you dinner and we'll have a celebrity guest. It's going to be a lot of fun. So Timothy, glad you're going to be there. It's going to be great. So appreciate everybody. This replay will be available. We'll send it out to everybody. Thank you, everybody, for being here. It adds so much. I love the participation, love the polls, the questions, all of that. So really, it's very inspiring to all of us to have you here and really be educating yourself, whether you're watching this live or in a replay. But thank you again to our panelists for being here. This was an awesome conversation. Look forward. It's always great to be with good friends and talk about what's happening in the world. So appreciate all you guys. Appreciate the audience as well. And look forward to connect with everybody soon. Thanks a lot, guys.
Thanks, Bronson. Good job.
Thanks, guys. Appreciate it.
Thanks, Bronson. Thanks, guys.